Welcome, David. Pleased to have you here. David is our representative with Gillico, who not only has a tremendous understanding of his own products, but also has a very good feel for the market out there as well. So do not be bashful as far as typing in a question during the webinar, or you can drop questions down, and at the end I will unmute everybody to field those questions along the way. So with that, David, why don't you go ahead and take it away, and we'll get started.
Hey, thank you, David, and good morning, everybody. Thank you so much for taking your time to be on today. This webinar is scheduled to last approximately 40 to 45 minutes, and we're going to be going over some very interesting and very timely products. Before I get started, I would just like to say that at Guaranty Income, we are extremely pleased to have this relationship with American Independent Marketing. We believe they are one of the most tuned-in marketing organizations when it comes to long-term care or combo long-term care products. So we're very, very pleased to have this relationship. So with that, I'm going to go ahead and get started. And we're going to go through 3 products. And the first one is AnnuiCare, and this is our primary product. This is Guaranty Income's flagship product. AnnuiCare is simply an annuity that triples in value to cover all forms of long-term care. For example, if somebody deposits $100,000 into AnnuiCare, they will immediately have a bucket of money of $300,000 to pay long-term care expenses. Now, because this product is underwritten, everybody can't be issued, and there's going to be those that will be declined. And incidentally, our medical decline rate now is under 20%, which we think is probably as strong of an issue rate as there is in the industry. But for those of your prospects who are declined, we've developed a new product called Flex Plus 10 with Bonus Care 10, and this is an annuity that is designed to provide real additional dollars to help offset long-term care expenses. But here's the big issue. This product is guarantee issue, and everybody qualifies. Now, toward the end, I'm just going to make an honorable mention of our 4-year multi-year guarantee, and the reason I choose to do that is because there's something very unique about this particular MIGA. It's issued through age 100, so that corridor between age 85 and 100, which is there's really not much product. Here's a good quality, high-yielding multi-year guarantee, again, issued through age 100. Now, I want to start out by talking about what's happening in the traditional long-term care arena. You know, I attend the annual ILTCI conventions each year, and this is a bringing together of long-term care actuaries, presidents of long-term care companies, from the biggest to the smallest, and they meet for 3 days. And when I attended it last year in Dallas, the number one word that I heard was, in conjunction with long-term care, was crisis. And I want to kind of share with you what I learned at that meeting. What we found out is interest rates, obviously we all know they've remained low, and that's part of the long-term care pricing formula. At the same time, nursing home costs have been soaring, and it was estimated that last year the average cost of a 1-year stay in a nursing home tipped just a little bit over $90,000. That situation gets additional pressure because people are living longer, and that means there's a higher likelihood that more people are going to need some form of long-term care. As a result, we've seen some very hefty increases in the premiums for traditional long-term care. We've also seen a tightening in the underwriting. And as a result of all of these things happening, many iconic traditional long-term care insurers have decided to pull their product and exit the market entirely. Now, here is some information that I just received at the last year's ILTCI convention. We learned that in 2002, which is pretty much the heyday for traditional long-term care sales, the total volume of traditional long-term care sales was $1.2 billion. That insured 754,000 lives, and it was spread over 104 carriers. Fast forward 10 years to 2012, that $1.2 billion dropped to $580 million, so that's in half. Number of lives written went from 754,000 down to 223,000, and the number of carriers that issued in 2012 dropped from 104 in 2002 down to 21 carriers in 2012. And then we just recently heard from LIMRA that traditional long-term care sales dropped by 30% in just 1 year. That's last year in 2013. So when you see a scenario like we're looking at today, when we have more people that are becoming seniors, retiring, turning 65, should be concerned about long-term care, and we seeing that at the rate of roughly 10,000 a day. Pardon me, you'll hear me clear my throat occasionally. I'm sorry it's distracting, but it's kind of, I'm in Dallas, and this is This is kind of allergy season for us. But when you see more people needing long-term care and you see less companies providing it, that creates a supply and demand opportunity. Anytime that the supply is less than the demand, typically a lot of product gets moved. Now, I just want to give you a quick rundown of some of these iconic companies that have chosen to exit the long-term care market. It began in 2009 when Unum pulled their product, followed by Allianz in November of 2009. And then MetLife, obviously an iconic company, stopped issuing new cases in 2010, followed by Guardian in 2011. And then Sun Life exited the linked benefits market in 2011, along with John Hancock, who exited the single pay and linked benefit product that same year. And then in 2012, Prudential exited the long-term care market. So these are some of the biggest issuers of long-term care from that period, from 2009 through last year, have exited the market entirely. So what is the solution? Folks, we believe it's going to be a product like AnnuiCare for many of your clients, that also it's an annuity that also provides long-term care. Now, I told you last year I attended the ILTCI meeting in Dallas, and the real key word I kept hearing over and over again was crisis. This year I attended that same meeting in Orlando, and the most common word I heard was alternative. So I guess the thinking has gone from, yeah, we have a crisis, and now we need to start looking at alternatives. And this is exactly what AnnuiCare is. It's an alternative way to provide your clients and prospects quality long-term care coverage. AnnuiCare offers 3 plans to choose from. Now, when I say plans, you'll see there's a AnnuiCare 10, 7, and 5. That's the length of the annuity surrender period. AnnuiCare 10 is issued through age 79, and the current rate is 3.15%. I think you'll agree that's a very competitive rate in today's low interest rate environment. For your older clients and prospects, AnnuiCare 7 and AnnuiCare 5 are both issued all the way through age 85, and you can see on the right the AnnuiCare 7 current rate is 3%, and the AnnuiCare 5 current interest rate is 2.75%. Now, talking about those rates, they're very competitive, but I want to point out they can get even more competitive because Guaranty Income uses what is called a portfolio renewal rate approach. And all that really means is as interest rates go up, your in-force clients that have Guaranty Income products, we're going to pass that right along to them so they're not stuck in today's current low interest rate environment. You know, this is really important because there's a tremendous amount of money on the sidelines. There are people that are waiting for a little bit higher rate before they're ready to buy anything. And I'm going to explain to you why they don't have to wait anymore. We have a scenario in this country where a lot of annuities are coming out of the surrender period. And your prospects and your clients are looking for competitive rates. And what's really happening is most of these companies now are actually renewing them at the guaranteed interest rate. Now, you can always take the long-term MIGA approach, 10-year, multi-year guarantees, but the problem in doing that is you lock them into a low interest rate for a long period of time. So today you might be able to find 3.25% on a 10-year MIGA, and they'll be happy with that today, but in 3 or 4 years when bank CD rates go to 4 or 5%, they won't be happy then. So what is the solution? Guaranty Income solution is very simple. Portfolio-style renewal rates. Our current portfolio rates are competitive, but as investment yields increase, the portfolio renewal rates will increase as well. So that money on the sidelines, it's really time to move it because they're not going to be locked into low interest rates. And you can check out Guaranty Income's renewal history on our website, and you'll see that we're one of the very few companies in America. We're so proud of our renewal history, we publish it on a consumer website. The AnnuiCare commissions, might as well talk about that right now. On the AnnuiCare 10, which is the product we sell the most of, the commission is 7.5% through age 74, and at age 75, it drops back a couple of points just like most annuities do at age 75. So getting back to AnnuiCare. AnnuiCare is the original annuity-based long-term care. It's offered exclusively by Guaranty Income Life, and it's specifically geared toward both annuity and long-term care producers. And I want to reiterate this because I think it's important. This was the first annuity long-term care product introduced in America, which means we have experience with the product, and I'll get to that in a moment. Now, a question may come to mind, why did Guaranty Income develop the first annuity that also provided long-term care benefits? Well, it's very simple if you look at the demographics. what we learned is that 85% of Americans aged 65 and older have no form of long-term care insurance. Pardon me. And if you get down to those younger boomers that are in their late 50s to mid-60s, you're going to find that number's more like 90%. So the point is, approximately 90% of the people in America that should own long-term care insurance have chosen not to buy it. So the question is, why? Why did they choose not to buy it? Well, I'm going to give you some reasons. One, it's become expensive. The rate increases have become kind of hefty, and many people have chosen to have long-term care to drop it, and those that might have otherwise bought it chose not to. Also, we've seen, as I mentioned earlier, underwriting has tightened. So individuals that may be in the identical health 5 years ago may have qualified. Somebody the same age, identical health today, may not qualify. The companies are having now a tendency toward cherry-picking their clients. And all those are good reasons to justify not buying something that they should have. But we believe the number one reason that predominantly seniors don't buy long-term care insurance is because they're reluctant to pay for something they may never use. So we're having to deal with the consumer mindset. And the consumer mindset toward long-term care, although it's not appropriate, but it's true, it's a use it or lose it kind of proposition. So their thinking is, well, if I don't use my long-term care benefits, I lose my premium. For example, if my premium is $3,000 a year and I pay that for, even if I don't have rate increases, which is unlikely, and I pay that for 10 years, well, then I've spent $30,000. And if I die in a car accident or natural causes, that $30,000 is money that will not be passed on to my heirs. So again, they're reluctant to pay for something they may never use. Annuicare completely solves that problem, and I'm going to get to that in just a moment as well, I promise. But the end result is this. The majority of retired Americans or those planning to retire are self-insuring for their long-term care needs. It's essentially gambling with their life savings. There's at least a 50% chance that they're going to need care. It's probably going to cost them in the neighborhood of $90,000 a year, yet they're running that gamble that they're going to be in the 50% that won't need it. Now, that expression, self-insuring, is very important because the majority, over 90% of Americans, have chosen to self-insure. So what we decided in 1999 at Guaranty Income, in looking at this problem, the majority of people wanting to self-insure, not wanting to buy long-term care, we decided, let's join them. Why fight them? So we developed Annuicare, which is essentially a better way to self-insure, a way where your client's money is safe, it's free from market risk, it's liquid, they can access it, it grows tax-deferred, but most importantly, it triples the value of that annuity. That's 300%. So if somebody puts in $100,000, they have $300,000 of long-term care. So they're still somewhat self-insured, but with a very nice safety corridor between the cost of care and their life savings. Now, I want to share with you a really quick sales presentation. It's a very simple one. It's been used by a lot of our top Annuicare producers across the country, and it's a concept sale. And the reason why I think this is so important is I believe when the consumer buys in on the concept, the next step is they're going to buy the product. So let me just share this with you. I want you to imagine that individual who is currently self-insured. By that I mean they're holding back some money that they don't plan to spend. They're not going to buy a car with it. They're not going to take vacations. This is going to be their go-to money in the event that they become ill or injured and incur long-term care expenses. Now, let's imagine this self-insured person has $200,000 that they do not plan to spend. I'd like you to visualize them standing on the street with that $200,000 in a big bag. Obviously, that's not safe. But they're standing in the street, and right in front of them, there are two banks. There's a bank over here on the left, and there's a bank over here on the right. Now, the bank on the left has a sign in the window that says, deposit your money here. It will be safe. You'll get a fair rate of return. Should you become ill and injured, you may have to pay a little interest penalty. For the most part, you can come down to the bank, withdraw your $200,000, and use that to pay your long-term care expenses. So what did I just describe? A typical bank CD or money market account. It's a bank-type instrument. Now, the bank on the right has a similar but slightly different sign in the window. It says, deposit your money here. It will be safe. You'll get a fair rate of return. But should you become ill or injured and incur long-term care expenses, you can come down to this bank and not just withdraw the $200,000 that you deposited, but over a 6-year period, you can withdraw 3 times that much, or in this case, $600,000. and that would generate a $100,000 a year benefit for 6 years. Now, imagine this person who's got this money, they're standing on the street, and they have to choose which bank they want to deposit it in, and they don't own long-term care. Folks, what is your best guess which bank they're going to deposit their money in? I mean, obviously it's Bank 2. Actually, you can kind of put yourself in that same position. Which bank would you choose? So, folks, that's a very simple sales presentation, and again, as I say, it's been used by many of our top AnnuiCare producers around the country. Now, earlier, I mentioned that at Guarantee Income, we believe the number one, well, there's a lot of reasons why people chose not to self-insure, denial, expense, underwriting, but we believe the number one reason is, again, they're reluctant to purchase something they may never use, and so they kind of have the mindset that traditional long-term care is either a use-it or lose-it proposition. AnnuiCare completely solves that problem, and here's why. Because if your prospects don't need long-term care benefits, they don't get sick, they don't get injured, they can get their net deposit back, they can get their entire deposit back plus net interest. Or if they pass away and have never used benefits, the total value of their annuity plus net interest will be passed on to their heirs. So what have we done? We've taken that use it or lose it consumer mindset, and we've completely changed it to benefits if you need them and your money back plus interest if you don't. Folks, that's the number one reason why AnnuiCare sales are up. Now, I'm going to go through the concept, and this is just kind of the nuts and bolts of how it works. And again, we can make this as complicated as we want or as simple as we choose. And because AnnuiCare is such a simple product, we're going to take the simple approach. And the simplicity starts right here. The numbers I'm about to go through, they apply to both male and female. Our product is not gender distinct, which really gives females a great advantage. And it applies to all ages. So let's assume your client deposits $200,000 into AnnuiCare. Immediately, the AnnuiCare rider will generate an additional $400,000 of reserve to pay long-term care benefit. And if you add those two together, their $200,000 annuity plus the $400,000 additional benefit provided by the AnnuiCare rider, you'll see that their $200,000 deposit has now leveraged the $600,000 long-term care benefit. So let me tell you how the benefits are paid. For the first 2 years, the benefits are paid directly out of their annuity, so you see they're still somewhat self-insured, and it's penalty-free. But for the next 4 years, the same benefit, daily benefit, will be paid out of the AnnuiCare rider, totaling a 6-year benefit when you add the two together. So again, it's paid out of their annuity first, and here's where we make that safety corner. In this case, $400,000 would have to be used up before they would be self-insured again. So we build a safety corner to protect the rest of their savings. So how do you calculate the daily benefit? Well, remember, this is going to be paid out over 2 years, this over 4. So if we take this $200,000 and we divide it, first we multiply it up to $600,000, that's the total benefit. And then you take the $600,000 and you divide it by the 6-year benefit, that is going to generate $100,000 a year of long-term care benefits for a total of 6 years. And I think most of you have probably heard the statistics. The average stay in a nursing home is less than 4 years. It's approximately, I've heard 3.2, 3.5, and 3.7. So the experts have the numbers all over the map. But the point is, a 6-year benefit period is going to be sufficient for most of your clients. I also wanted to point out, there's a lot of emphasis on inflation, and there certainly has been inflation in the cost of long-term care. And I wanted to point out that AnnuiCare, as the annuity value grows, the long-term care benefit's going to increase with it. Because remember, the benefit is based on the annuity deposit and or whatever it grows to, the current annuity value. So this is a lot like having a built-in cost of living adjustment rider. You don't have to pay any additional out-of-pocket premium for. As a matter of fact, with AnnuiCare, there is no out-of-pocket premium at all. Now, more nuts and bolts, what does AnnuiCare pay for? In other words, what's covered? And those of you with any long-term care in your background, this is going to be very familiar because it's identical to traditional long-term care. It'll pay up to 100% of the daily maximum benefit for home health care, homemaker services, hospice services, maintenance or personal care, respite care, assisted living, Alzheimer's care, and of course the nursing home. It will even pay 50% of the daily maximum benefit for adult daycare. So in answer to the question, what does AnnuiCare pay for? It pays for everything under the long-term care umbrella. Next subject, what do they have to do to qualify to go on benefits? And again, those of you with long-term care in your background, these are going to be the same benefit triggers that you're accustomed to. There are 2 triggers. The first one on the top is being unable to perform at least 2 of the 6 activities of daily living, which include bathing, eating, continence, toileting, dressing, transferring. Any combination of those 2 that qualifies them to go on benefit. And then there is a second trigger, and it's a standalone trigger, and that is cognitive impairment requiring substantial supervision. I know that's kind of a mouthful, but just simply means because of cognitive issues, this individual is not able to function adequately on their own for a reasonable period of time. That alone would qualify them to go on benefits. Now, I'm going to talk about everybody's favorite subject, underwriting. And I think you're going to like our underwriting approach. Now, I want to say up front, this is an underwritten product. If they wouldn't normally qualify for long-term care, there's very unlikely they'll qualify for AnnuiCare. We do underwrite it. And remember, we've got a guarantee issue product, and I'll be getting to that shortly. But the underwriting is really very simple. For your clients that are age 69 and under, it's going to be a telephone interview by a registered nurse. For your clients that are 70 and older, that same interview will be conducted face-to-face. Now, we use the services of a company named Univita, formerly the long-term care group. They are the biggest third-party underwriter of long-term care in the United States. So they've got a tremendous database, and they also have a base of these registered nurses that can literally get to anywhere in the country. Now, it's really important that you prepare your prospect for this interview and that they take it seriously. Let them know you're going to get a call from a registered nurse. They're going to say that they represent Univita, and this is regarding the AnnuiCare policy that you recently purchased. And they're going to be asking you questions, and it's very important that you have your doctor's names and addresses ready and all, so you have all this information prepared. Oh, as a matter of fact, ladies and gentlemen, in the application, there's a leave behind piece that tells them everything they need to do to get prepared for either the telephone or face-to-face interview. During the interview, they're going to find out what medications they're taking, what conditions they're taking them for. They're going to give them a brief cognitive impairment test. They're going to find out what doctors they've seen, what conditions they've seen those doctors for, ask them questions about mobility issues. Do you use a walker or four-pronged cane? Do you use a wheelchair? Are you able to drive? That's it. Now, what you're going to like most about our underwriting is what we don't do. There's no medical exam. There's no lab work ordered, no attending physician statements, no medical records ordered. All of these things that typically slow down the underwriting process of underwritten products, we have eliminated all of those and replaced that with either the telephone or face-to-face interview. There's no substandard ratings. They either qualify or they don't. And because of this very quick underwriting style, you can expect a quick response. We will typically give you an underwriting decision within 72 hours of the telephone or face-to-face interview. So that's the 72-hour underwriting. Underwriting decisions will usually be given within 3 business days of that telephone interview. Now, folks, I want to get into, again, some more nuts and bolts. These are the premium limits for AnnuiCare. The minimum premium for non-qualified deposit is $36,500. Now, that's not really a premium. Remember, they're just moving money from one pocket to another. But the minimum deposit is $36,500. That's going to generate a $50 a day room. And you're probably thinking, where can you go to the nursing home for $50 a day? And, you know, frankly, you can't. But there's a lot of folks out there, we're finding, that bought long-term care insurance quite some time ago. They managed to hang on to it throughout the rate increases, but maybe they got a $100 a day room or $120 or whatever, and they understand that's not going to be enough to pay the bill. They'd like some additional coverage, but they're either unwilling or unable to pay additional premium. So they can go find that what we call lazy money or money at risk. Lazy money would be money in a bank earning 1%, not really doing anything for them, or money at risk that's in the market. Transfer that into AnnuiCare. They still own that money, and that's going, and the AnnuiCare then will pay right on top of their traditional long-term care. Now, AnnuiCare also accepts qualified money. This is really important. According to the Investment Company Institute, somewhere in the neighborhood of 80% of all investable assets in this country are in IRAs, 401ks, TSPs, 403b plans, etc. So our ability, our unique ability to accept qualified money into AnnuiCare really is going to be a tremendous benefit for you and your clients. But I want to explain how the qualified money works. This is going to be just a little bit complicated, and I'll simplify it. Let's assume that your prospect, the only money they have is in their IRA, it's $400,000, and they want to put $100,000 into AnnuiCare to fund their AnnuiCare. Here's what will happen, and this is all done internally. The entire deposit comes to Guaranty Income. We're going to open up two accounts. One is AnnuiCare, and the other is an IRA shell earning the same interest. So they send us $100,000. We're going to take $20,000 and put that into AnnuiCare right now, and the other $80,000 into an IRA shell earning the same interest rate. Then we will 1099 them for that $20,000. So that $20,000 or 20% loses qualified status that year. The following year, internally, we will shift another 20%, or in this case, $20,000, from the IRA shell into AnnuiCare, and they'll get 1099 for that, and that will no longer be qualified money. And we will do this until by the end of the fifth year, all of the money now will have been transferred internally from the IRA shell into AnnuiCare. It will now all have non-qualified status. Now, the reason we did it that way is that allows them to spread the tax burden on that qualified money out over a 5-year period. Oh, and incidentally, for your clients that are 70 and a half and older and are being forced to take required minimum distributions, this internal transference that we're doing from the IRA shell into AnnuiCare will satisfy, in most cases, the required minimum distribution, not on that, only on that money, but on up to 4 times that much money. So all this is done internally. All the benefits are there immediately. All the commissions paid right away. This is just a procedure that we use to spread the tax burden out over 5 years. Maximum deposit into AnnuiCare is $300,000. Folks, that's going to generate $900,000 of tax-free benefit over a 6-year period. So that's probably enough. If they wanted to receive their care at the Ritz-Carlton, West Palm Beach, Florida, it would probably be enough to pay that bill. So those are our premium limits. Now I want to talk about the fun stuff, the AnnuiCare Advantage and the opportunity for all of us. I mentioned earlier, anytime demand exceeds supply, which is exactly what's happening in the long-term care industry, we have less suppliers, we have a greater demand for it, we have a greater need for it. It creates an opportunity if you have the right product. Now, let's go all the way back to 2006, the Pension Protection Act, one of the most talked about pieces of legislation in recent history. It did a lot of wonderful things, but here's something really important it did. It created a major tax advantage for annuity or asset-based long-term care. It provided for the tax-free funding of annuity LTC combo products, which is exactly what AnnuiCare is. Effective January the 1st, 2010, that's when this went into effect, the annuity proceeds that are used to pay for the long-term care rider are no longer taxed. They used to be considered a distribution of interest from a tax-deferred annuity, and it would trigger this little 1099. They were small. They were nuisance 1099s, but, you know, every year your client would call you and say, why is my long-term care company sending me a 1099? All that got eliminated January the 1st, so the premiums are tax-free. So if you look at AnnuiCare, from the Pension Protection Act compliance standpoint and from the tax standpoint, I think you're going to see if you have we have got a combination of tax-deferred interest, tax-free premiums, and tax-free long-term care benefits. So from a tax perspective, it's really the perfect tax combination. So AnnuiCare is Pension Protection Act compliant. Now, those of you that have listened to company representatives in the past, I think we're all admit to being guilty of one thing, and that is we all say the same thing a different way. Our product's the best. Well, I'm going to say I'm the worst of all of them. I'm going to say it very differently. AnnuiCare eliminates its competition, and folks, I'm going to prove it to you. And we're going to talk about the competition, and I'm going to acquaint you with the competition, and I'm going to show you the differences. First of all, I want to talk about the big difference is experience. At Guaranty Income, we have 15 years of underwriting experience and 15 years of high issue rates, so we're not new at this. We have 15 years of policy owner and producer satisfaction, but also, here's the big one, 15 years with no long-term care premium increase. So the AnnuiCare rider today is sold at the exact same price it was in 1999, 15 years ago, when we first introduce this innovative product in America. Here's the end result. We have the best rate in the industry. And rate's really important. If you look at traditional long-term care, you'll see that rate's extremely important. Matter of fact, if you tried to reproduce the AnnuiCare benefit with traditional long-term care, you will very quickly learn that AnnuiCare is being sold somewhere between 1/3 and 1/2 of what it would cost to reproduce these benefits with traditional long-term care. The other advantage is no long waiting periods. We've seen some companies come and go in the combo space. They weren't, I guess, really committed to it. And what some of these companies all had, or many of them had in common, was waiting periods, and some as long as 2 years. So let me explain what a 2-year waiting period means. If your client buys a product with a 2-year waiting period today, and they get sick or injured tomorrow, and they need care immediately, they're going to have to wait the balance of 2 years before they can even file a claim. And then once they've done that, there's also going to be a 90-day elimination period. So that 2-year waiting period, that may not be convenient for the person that needs care today. Guarantee Income has no waiting period, only that mandatory 90-day elimination period. So same scenario, if somebody buys a AnnuiCare today, they get sick or injured tomorrow and they need care immediately, they can file a claim immediately and begin to receive benefits as soon as the 90-day elimination period expires. So no long waiting periods, pardon me, is a really big edge. Now, what I'm going to do right now, I'm going to walk you through the 4 companies that sell annuity-based long-term care. I'm going to tell you why I'm doing this. I'm doing this for one reason. When you recommend to your clients who trust you, when you recommend AnnuiCare, I want you to be 100% positive and sure that it is the best in its class. There's only 4 of them. It's Guarantee Income, the AnnuiCare product, there's State Life, One America, Forethought, and Lincoln Financial on the right. We're going to compare them in the 2 most important areas, and here's what the 2 most important areas are. One, how much bang do you get for your buck? In other words, for your deposit, how much long-term care benefit do you get? But there's the second important issue that's often overlooked, and that is, what is the future cash value of this annuity? Because you know, folks, as much as roughly half the people will use benefit, what about the half that don't? What about the half that change their minds and decide they need income? Or the half that dies without ever needing long-term care benefit? What's the value for them, or the value passed on to their heirs? So we're going to start at the top. This is a male 65, right up here, $100,000 premium. And we're going to look at the end of the first year long-term care values. And you can see right here, Guarantee Income at $306,000 is the highest, and right over here, State Life is the lowest at $255,000. So that's a lot of difference. I believe that's just under $70,000 difference in total benefit. And Forethought and Lincoln Financial fall in between. Now, if you go 10 years out the road at age 75, and this is using everybody's current rates and using their proposals, the Guarantee Income AnnuiCare total benefit will have grown to $369,000, and again, State Life is the lowest at $304,000. Forethought and Lincoln Financial fall in between. And if you go out to age 85, and this is where claims occur, folks, this is an important number, the Guarantee Income's long-term care benefit will have grown to $453,000, but this time it's over on the far right. Lincoln Financial has the lowest benefit at $310,000. So when it comes to bang for the buck in terms of long-term care benefit, it's very clear that Guarantee Income provides the most benefit. Now let's look at the other side of the equation. What about people that don't use benefits? What about those that die and it's going to become money passed on to their heirs? It's going to be wealth transfer. So we also have to measure the cash values. At the end of 10 years, remember, it's a $100,000 deposit. Using everybody's current rates at the end of 10 years, the Guarantee Income cash value, or money that would be passed on to the heirs, is $110,000. And of the 4, State Life's the lowest. I'm sorry, Guarantee Income was $122, and State Life was the lowest at $110, and then Forethought and Lincoln fell in between there somewhere. If you go out 20 years, the AnnuiCare product will have a cash value of $151,000 at current rate, and at current rate, State Life will have the lowest. That's a cash value of $120. So that's $31,000 roughly more cash in the AnnuiCare to be passed on to the heirs than its lowest competitor. And the other thing you need to look at here at the bottom is, what is the cost of the rider? And you'll see Guarantee Income and State Life are identical. Well, Forethought is the highest at 1.5% as opposed to 95 basis points over here. But you have to look at Lincoln Financial. They're only a half a point. They're the lowest. And you have to ask yourself why. There are two reasons. This product only pays the full daily benefit for the nursing home. All other benefits, whether it be hospice, respite, assisted living, Alzheimer's, and home health care, are paid at only 50%. Also, this product has a 1-year waiting period, and we just talked about how devastating the waiting period could be for somebody who needs care immediately. So, ladies and gentlemen, I wanted to introduce you to the 4 companies that sell annuity-based long-term care. And again, my only reason for doing this is when you recommend your clients who trust you to buy annuity care from Guaranty Income, I want you to be 100% confident you are recommending the policy that gives them the most benefit. So enough of that. I'm going to read this slide, then I'm going to paraphrase it. What could be more advantageous than a guaranteed fixed annuity that also offers qualified long-term care? You know, there's a word that's been floating around our industry. We hear a lot of it, and we're going to hear a lot more of it, and that word is suitability. So let me paraphrase this. What could possibly be more suitable than a guaranteed annuity that's guaranteed never to lose money, that offers tax-free premiums and triples in value for long-term care, that pays tax-free benefits in a society where 90% of the people that should have long-term care don't, and Medicaid and Medi-Cal are going broke. Folks, the point I want to make is there really is a long-term care crisis. I'm not making this up. It's the real deal, and annuity care is the solution, and because of this, it's going to be one of the most suitable sales that you could make to your prospect. And let me say this. Those of you that sell annuities, typically annuities are being sold today for 3 reasons. One is for income riders, the other is to keep the money safe, and the third one is to help the money grow. Well, what if you were just growing that money and keeping it safe just so it would wind up in the hands of the owners of the nursing home because they have no long-term care protection? Shouldn't some of their annuity money have that tripling effect and build that corridor of safety between them and their life savings? I also want to point out annuity care offers the choice of dignity, and what I mean by that is very simple. Annuity care pays the full daily benefit for home health care. Folks, it gives your clients an opportunity to have that care catered right into their home as opposed to being in a facility for the final years of your life, and that certainly is dignity. So full daily benefit for home health care, folks, you know what that really is? That's keep me out of the nursing home insurance, keep me in my home, and get the care to me that I need. Don't force me to go to a facility. That's the choice of dignity. So I'm going to summarize annuity care. Don't go away. Then we're going to jump quickly through the guarantee issue product for those that don't qualify, but we believe there is many challenges, a crisis in the long-term care arena today. We believe annuity care solves a lot of today's long-term care challenges. It solves that use it or lose it kind of mentality, changes that to benefits if you need it, money back if you don't. We haven't had rate increases, so it solves that challenge. You have greater flexibility because you've got a 5, 7, or 10-year plan to choose from. And also, it's worth mentioning, you are in a position to offer your clients optional bonuses. They are out of commission, but the bonuses are 1, 2, or 3%. And the reason we give you that option is because you may come across a situation where the money's a little hard to move. Maybe there's a penalty on a CD, or the market just dropped a little bit and they lost 2%, and they want to wait for it to come back. You can solve that problem. Annuity care offers greater liquidity, 3 areas. It has the 10% free withdrawal. Very few people do it because that affects the benefit. Or they can take out their accumulated interest at any time, even if that exceeds 10%. And the ultimate liquidity is the annuity care rider that triples the value of that annuity. Folk gives them 300% for long-term care coverage. And again, I want to reiterate, the annuity care commission is 7.5% through age 74. That's on the annuity care 10, and that's the product we sell the most of. So if you add it all up, there's really 3 considerations: price, commission for you have to be paid, and long-term care benefit for your client. And folks, annuity care hits the bullseye in all 3 of those areas. So I'm going to change hats right now. That was annuity care. And again, this is being recorded, so if you want to brush up on it, I know David Whalen will probably have that recording available on his website as quickly as they can. But I'm going to change subjects now. I want to talk about the people that can't qualify for long-term care. So At Guaranty Income, we innovated AnnuiCare, and we innovated this as well. We have a new product that's guarantee issue, Flex Plus with Bonus Care 10. Folks, this is not long-term care, but it does generate additional dollars to offset long-term care expenses, and here's the beauty of it. This is a guarantee issue product. Everybody qualifies, and I'm going to tell you in a moment, in using this product, there's a way that you can generate commerce in your practice immediately, and I promise I'll get to that in a moment. So for those who can't qualify for long-term care, we have Flex Plus, issued through age 79, and just like its counterpart with AnnuiCare, it's a portfolio-style renewal rate, current rate 3.15%, and all the products that I'm going over with you today do pay full accumulation value at death. So Flex Plus with Bonus Care 10, it's guarantee issue. The riders I'm about to explain to you are at no additional cost. There's no underwriting whatsoever. 100% of your clients qualify. Now, it has a lot of different benefits, but these are the two big ones I want to go over with you because these are the ones that help offset long-term care expenses. Excuse me, in this product, you are going to see waiting periods, 4 years and 10 years, but remember, this is a guaranteed issue product. So, after 4 years, if they fail 2 activities of daily living, they can elect enhanced annuitization, which means they can annuitize the annuity and receive benefits as much as 239% of what anybody else would get annuitizing the same annuity because they failed 2 activities of daily living. So it's almost 2.4 times the payment that anyone else would receive via enhanced annuitization. Now, after 10 years, if they fail 2 activities of daily living and they choose to elect the enhanced annuitization, it's their choice, we'll bonus them 10%. We'll put 10% of their current accumulation value into the annuity and then trigger the enhanced annuitization. And folks, that'll generate an annuitization figure of as much as 262%, over 2.5 times what the normal annuitization would be. So folks, this is not long-term care. What this is using the same triggers, failing 2 ADLs, it generates them somewhere between 239 and 262%, depending on age, and depending upon how many contract years have passed, of additional money to help pay long-term care expenses. So folks, all of this is guarantee issue. There's no underwriting. So here's what I want to point out. Folks, this is the best product. It's the ideal product for your prospects that can't qualify for long-term care. A minute or two ago, I said I'm going to show you a way that you can use this product to generate commerce in your practice immediately, today if you want. And folks, I do these webinars a lot. I get phone calls a lot. What I'm about to tell you works. Go to your file cabinets or your computer, wherever you keep your customer information, and pull out those people that were declined for long-term care. Pull out the ones that were rated so high they could not or would not pay the additional premium, or pull out the ones that had health issues to the point where they didn't even bother applying. Folks, those are the prospects for this product. Get them on the phone. Get Mr. and Mrs. Jones, who applied a couple of years ago and were declined. Mr. and Mrs. Jones, a couple of years ago, you both wanted to get long-term care insurance. Unfortunately, we were not able to get it issued. You had some medical conditions that made that impossible, but I've got some really, really good news for you. There's something new. There's a new product that develops real additional dollars to help offset long-term care expenses, and here's the fun part. You qualify. No physical. It's guarantee issue. I can't wait to show it to you. When can we get together? Folks, if you do that and you get to know this product quickly, and the great folks at American Independent Marketing can bring you right up to speed on it with brochures, whatever you need, illustrations, and go call on those people that wanted long-term care and couldn't get it. That's going to generate commerce in your practice immediately, and it's going to help those clients that you didn't think you could help before. So folks, the commission on Flex Plus 10, 7.25%, 7.25% through age 74. If you add all this together, AnnuiCare, the best in its class, I hope I've proven that to you, and Flex Plus, a guarantee issue version for those that can't qualify, you're going to see that at Guaranty Income, we've thought this through. These are the best products, and they're offered at the best price. But let me point out something else very important. Guaranty Income is the only company in America that has true annuity-based long-term care, qualified long-term care, and also has a counter offer for those that cannot qualify. something for those that aren't insurable. We've got it for both. We're the only company in America. So where that makes it easy for you is if you explain both of these products to your client, particularly those where the health condition might be a little iffy, explain both products to them and say, look, here's plan A. We're going to apply for this. If you get it, it's the best. But guess what? If you can't, don't worry. Here's plan B. We're going to get you money to offset long-term care expenses one way or another. It's a win-win proposition for everybody. Folks, a real quick mention of, I'm about to wrap up here, of our multi-year guarantee. There's still folks out there that will settle for nothing less than guarantees and competitive rates, and we have it, and I just want to introduce to you, our product is called Guaranty 4. It's a multi-year, 4-year multi-year guarantee. It's a walk-away, no strings attached, no auto-renewal. It guarantees 2.5% for 4 years. But the real uniqueness of this product is it's issued all the way through age 100. So again, in that corridor between age 85 and 100, where there's really no product out there to speak of, here we have a quality product with an aggressive interest rate and a 4-year walk-away. Folks, in summary, what do we do at Guarantee Income? Well, we manufacture fixed annuities, and our claim to fame is great rates. Our other claim to fame is our flagship product, AnnuiCare. It's a rider that can be put on any of the Guarantee Income annuities and will triple the value of that annuity for all forms of long-term care. We've even come up now with a solution for your prospects that can't qualify for long-term care. We have the Flex Plus guarantee issue. And I also mentioned earlier, our products are for portfolio-style renewal, which means if you believe interest rates are going to go up in this country, then you believe their renewal rates are going to go up, and it'll help you get some of that money off the sidelines. So these are products that will sell in any interest rate environment. Real quickly, I just want to tell you, Guarantee's income reputation has been based on 3 things: service, experience, and innovation. Been around since 1926. When you call our home office, you're going to get a real surprise. You're going to talk to a person. We have a switchboard. And because of that, most service requests are handled with 1 phone call. You'll never be in your car dialing the first 3 letters of somebody's last name on your cell phone trying to get through to the right person. And at Guarantee Income, we have built innovative products that fit your clients' needs today. Folks, this is what our brochures look like. The AnnuiCare is on the left. The Flex Plus is on the right, the Guarantee Issue product. And the AnnuiCare marketing guide's right in the center. This is in a PDF. You can download this from our site. You can contact American Independent Marketing. They can provide it. That's going to fill in all the gaps. It's going to answer all the questions. So in any event, I want to thank all of you for being on today. We came in just a little over 45 minutes. I got a little talkative there. But I want to thank you all for being on today, and I hope you can make 2014 your best year ever. And I'd like to turn it back over to David Whalen.
Hey, thank you very much, David. I do appreciate you spending some time with us today. And I have unmuted everybody on the call. If anybody has any questions of David right away, feel free to bring those up right now.
Dave, I've got a question.
Yes, sir. Who am I speaking with?
This is Alan Lynn.
Hi, Alan. Fire away.
So if I have a client that has an annuity that's out of the surrender charge time, can he roll that into AnnuiCare with no tax consequence according to what the Pension Protection Act states?
Yeah, absolutely. It's actually done under the rules of 1035 exchange, even before the Pension Protection Act. But because you're right, yes, you can. AnnuiCare is an annuity, and you can move annuity to annuity.
Okay. Is there any cost on the long-term care rider on AnnuiCare?
There is, and that cost is going to be dependent on their age. I'll give you an example. It's expressed in a portion of the interest. So, for example, 61-year-old, it's 0.74 or 74 basis points, not even 1%.
Right.
At age 65, it's 0.95. At age 69, it's 1.31. And whatever it starts out at, it's going to stay at that number. It's not going to increase as they get older.
Okay, and that comes out of his accumulation value then, correct?
Correct. The interest goes in, and then that comes out, and then they enjoy net interest.
Okay.
Good question, Alan. Any other questions out there?
Yes, this is Darrell Hall. Is this available in California?
Yeah, AnnuiCare is available in California, Alan. Unfortunately, the riders on Flex Plus have not yet been approved, but the AnnuiCare is definitely available.
Okay, thank you.
Yeah.
Okay, if there are no additional questions, thank you everybody for joining us again today for this webinar with Gillico on their link benefits. And we appreciate you joining us, and everybody have a great day. Thank you. Thanks again, David.
Okay, thank you, David. Bye.
Thanks, Dave.
Bye.